Hey, what's up guys, this is Irfan here from sportincubator.com and welcome to another video. Today's Tuesday guys, and I want to break down the trade that I took on NAS100, and I want to show you exactly how I did it. I regret it so much because I closed it so fast. But also there was another trade that I personally didn't take, but I want to show you what happened on GBPUSD exactly when New York session has started. So without any further ado, let's get into the trade. So I'm gonna start with NAS100 first and show you exactly how I took this trade, guys. So as you know, I always wake up at 8 a.m. in the morning. I'm behind the charts at 8 a.m. because this is when New York session opens. But for NAS100, I kind of slept in. So I woke up when I didn't wake up during this time, but actually I was behind the charts at 11:25 in the morning Eastern Standard Time, which is 9:25 my time. And then I noticed that something really cool happened. So for NAS100, as you can see on a 5-minute time frame, we have this strong head and shoulder right here. So it means that there's a bunch of liquidity above this resistance level, and I explained it a lot of times, guys, on every single video, that what liquidity grab is, what high probability supply and demand zones are. If you don't know what they are, I highly recommend you to watch my other videos or watch my first video on my channel that I fully talk about smart money concepts, trading and strategy. I'm also gonna put a card above this video that takes you to the most recent video that I recorded for smart money concepts or high probability supply and demand zones, and it's gonna be super helpful for you. So, and then I noticed that we have like a huge break of a structure below this level. So this is a huge break of a structure. So it means that the trend of the market is changing. Why? Because first of all, we have this break of a structure and this break of a structure, and these are like the obvious support levels that we have, this one and this one. And the thing is that after it happened, something cool literally followed that, because we have this huge bullish candle that created this gap, and this is a high probability demand zone. This is a high probability demand zone, and the reason is that after this huge spike, this candle never tapped into this zone. So that's why there's a little bit of gap. See, there's a little bit of gap left. So it means that there's a gap in between. So that's why it's a high probability demand zone. And what I did was, I believe when I noticed these two two candles, I think I took them right here, if I'm not wrong. Let me see. Let me just go forward a little bit. Yes, exactly. I took it right here because I noticed that this high probability order block is getting respected. So what I did was I put my buy stop right here, and then I put my stop loss here, and my TP was somewhere around here. But at the same time, I knew that this is a really cool setup for two reasons. First of all, you have this huge candle that had a break of a structure above this level, and it closed above that. So I know that the trend of the market is willing to go towards upside, and it created this gap as well. And the second reason is this huge gap right here. This gap has to be filled in. So it means that the price has to reach this level to fill in all the leftover gaps, because we have multiple red candles back to back dropping, break of a structure right here, and then here we are noticing some sort of consolidation. So this consolidation means respect. So it means that it's probably not willing to go further down, and plus we have this high probability demand zone as well. I said, okay, I'm gonna put my buy stop a little bit further. I'm not going to open my position here. I wanted to make sure that is going to actually break above this previous high. So, and also I'm safer, and I know that we have a gap here, so I know it's probably going like further towards upside. At the same time, I shouldn't have done that, but sometimes I use Fibonacci level, and then I drew it from here all the way to down here. I said, okay, so if the drop started from here and it ended here, we have our golden zone right here, which is exactly our resistance level, because this support level turned into resistance level, right? So we have Fibonacci level right here, and I was kind of hesitant. I said, what if it just triggers my buy stop, goes a little bit above, and then it gives me a reversal momentum. So what if it happens? So, and this is exactly what happened. I was waiting, you know, I was supposed to take it right here, a few pips away, but as I said, I wanted to be super safe. It triggered my, oh yeah, sorry, this was the order block that I took, this one from here to here. So I was waiting for this one. It actually tapped this one. See, it triggered right now, and then I closed my position right here. That was a big mistake. See, because it literally broke above the Fibonacci level, so it means that the Fibonacci level didn't get respected. So we are not going to have any momentum towards downside, and if it happens, it's so odd because it literally didn't respect Fibonacci level. So it broke above our resistance level. Now it turned into our support level. So what I should have done was, when my buy stop triggered and the next candle literally happened right here, I should have moved my stop loss to break even and just leave a runner. Because if I wanted to leave a runner all the way to here to fill in the gaps, this is what would happen. Look at this. Like it would have been a beautiful trade, and it would be up literally 5% on my FTMO challenge. But I closed it super early because I didn't feel safe when I noticed that we have a strong resistance level here, and also the Fibonacci level is here, and the trend of the market is kind of bearish because of this massive breakout structure. But when I saw this candle, I should have just left it, but I didn't. I closed it somewhere around here. It's less than 1-to-1. It wasn't a good profit, but it was a profit. It wasn't a losing day, at least. And this is what happened. So it literally went up, and then here it started consolidating, and now it's coming down. So right now the price is here, and we have another high probability order block which left a lot of gap, which is from here to here. But this is London session. I'm not going to trade, but this is our next high probability demand zone that we probably can see some sort of reversal. But again, the same pattern happened. See guys, we have a break of a structure below the support level. The same thing happened here. Break of a structure below the support level. Maybe the same scenario is going to happen later, but I'm not going to trade today. So this is the trade on NAS100. Let me quickly show you what happened on GBPUSD, which is a really interesting one. And this is exactly happened during New York session when it just opened. So I'm going to go to EURUSD. It was EURUSD, yes. Yeah, EURUSD. Let me just go to 8 a.m. to show you exactly what happened. Look at this, guys. EURUSD was consolidating, break of a structure towards downside, making higher head and shoulder, break of a structure, see, higher highs and higher lows. Look at this. And I noticed that we have this high probability demand zone from here to here, and this high probability demand zone from here to here. So I'm pretty sure you know what they are because of the gap. We have this huge spike. You gotta find the last bearish candle. For supply zone, you gotta find the last bullish candle. So I explained everything on my video, guys. Go check it out. If you have any question, drop your comment here. So in this case, I'm really cautious. When I see two back-to-back support or resistance, supply or demand zones, I try not to take a trade for the first one because there's a high chance that the price wants to break below this level and make it invalid just to tap into this zone and then give us a reversal, right? So, but what happened was this. I noticed that we are actually seeing a really good momentum. I didn't take this trade, but I noticed it. I noticed what happened, and then I noticed that it's literally consolidating in this zone. Look at these rejections, guys. Look at these rejections. So the buyers are trying to reject the price towards upside, and let me see. And that's why we are kind of more confident to take a buy position here, just because of these momentums and a price push towards upside. So if you wanted to take a trade right here, put my buy stop here, your stop loss here, your TP right here, it would be probably, let me see, yeah, this trade right here. So it could be so close to your stop loss, but you know, you should be more courage to just hold it. And as you can see, it literally tapped my TP, smashed my TP, 1-to-1, beautiful 1-to-1. And if I wanted to leave the runner, I could have actually done that. But as I said, I didn't take this trade. So even if I wanted to take it right here, it could still be a really good risk to reward ratio trade. it respected this high probability demand zone, and it gave us a really good momentum just because of this consolidation and these shadows here, because the price is getting pushed towards upside. So you can take your buy position here, like above the previous candle, put your stop loss here, or the best case scenario, you can put your stop loss below the zone just to be safer, and your TP right here that you can take a one-to-one trade. And this is exactly what happened. You just gotta be more brave. Trust your analysis, trust your strategy, find a good setup, and stick to your plan. If you get stopped out, that's totally fine, because you followed your rules. That's what matters. All about risk management. When you're scared, when you open a trade, it means that your risk to reward ratio is not good, or your risk management is not good. So it means that you're actually going too big, that is scaring you, and you can't afford losing that. So these are two elements that make you I would say an unprofitable trader, because if you're a profitable trader, there's no emotion. And if you want not to have an emotion, you gotta have a really good risk reward ratio, because you shouldn't have any kind of emotion towards your money that you're risking. And that's the key I've learned during these years. And this is a really cool strategy, because a lot of people, I can bet you that when they see this candle and this candle, they just close their position. But literally in one level, see, it's literally, if I want to delete this, it's exactly at the same level that it tapped into like the support level, I would say, support line, and then it literally shot up. That's what I'm saying. Trust your analysis. If you get stopped out, that's fine. You wait for this one, you see what kind of confirmation you get. So thanks for watching this video, guys. Before you go, let me show you the results of Gold EA Incubator on our $1,000 account. Today's date is May 10th. We are up 123% in profit on a $1,000 account, which is almost 1.26% in profit. And we had a $300 withdrawal as well. This is our brand new $2,000 account, and we are up $220, which is 11% since April 25th. And our $5,000 account, we are up 5% profit since April 28th. So they are real, guys. We're not working on demo, so all the results are verified. If you want to check them out yourself, I'm gonna leave a link below this video. Join our Telegram channel. This is the best way that you can literally keep track of everything yourself. And if you want to grab your license, you want to trade completely hands-free, check out smartincubator.com. Again, there's a link below in the description, and grab your license, try it on the demo account, and even in your real account. And if there's no profit at all, then we have a guarantee for you. But it doesn't hurt. It's super affordable, that you can literally go and try it out yourself. And if you have any question, drop your comment here. I personally get back to you. Thank you so much for watching this video, and see you in the next one.